due to the rising rents of the core South Bank or North Southwark and Lambeth as we know it. There are many occupiers that are looking into more economical and viable locations, such as Elephant Castle, going down to Brixton, Peckham, Canada Water and other areas such as this. And we've seen the rise of commercial developments in these sorts of areas where traditionally they've always been residential-led development, but because of residential development viability with increase of affordable housing and Section 106 payments, the increase in rents in all these outlying areas is now justifying developers to be able to look at alternative development other than residential, and they are all starting to consider alternatives such as workspace, co-working is a big topic of debate at the moment, and love or loathe the WeWork factor. Modern day working has changed, and this is allowing opportunities for development of commercial buildings in areas such as Brixton to be able to compete with more traditional office locations such as South Bank.
In Waterloo over the last few weeks, in fact over the last quarter, there's been incredible activity. Most recently, Almacantar have launched a sale of 1 and 2 South Bank Place. One of those buildings, WeWork, are in the whole, Shell having been the pre-let on the other. HSBC Digital are going into 1,100 desks, 4 floors of the WeWork building. The activity is huge into the area already. We launched at Waterloo London the wholesale regeneration of the former Eurostar terminal, 135,000 square feet, leisure, food and beverage, retail centre, of which 32,500 square feet pre-let to Time Out Market. Incredible scheme, over 3 levels, really anchoring the station portion of that York Road right the way through to Waterloo Station itself. Between 1 and 2 South Bank Place and Waterloo London, HB Reavis have now submitted their planning application finally for 1 Waterloo, which will be nearly 1 million square feet of office and retail on the site of the former Elizabeth House. Between those 3 sites, really the rest of the regeneration of Waterloo started in many ways by the Jubilee Gardens residential portion, should be well set. Probably the major investment sale of the quarter in Waterloo was the purchase of the Royal Street site by Stanhope and Baupost, a little over 5 acres, purchased from Guy's and St Thomas's, which will be anchored by an NHS facility. The plan is to build a med tech cluster in that area, linking through to number 1 Waterloo and also Waterloo London, giving a run from literally the Waterloo roundabout deep through the site, past all of the railway, past Urban Nest, linking a wholesale area of Waterloo together finally.
So the commercial development market on the South Bank has gone from strength to strength over the last few years, and we're tracking about 10 million square foot, which is currently either consented or at the pre-planning phase. Currently underway, we have about 500,000 square foot in the Bankside and South Bank area, which is underway, but with vacancy rates on the leasing side of only 2.8%, it's a really good time for landlords to start putting a spade in the ground. One particular location is the Sumner Street and Park Street location on Bankside. So Land Securities have 135,000 square foot, which is they're going to start on site very shortly. And Sons & Co and JTRE have just started their construction phase of Triptych, which will have 65,000 square foot of commercial and 19 floors of residential space just by the Tate Gallery, so not formally specifically a mainstream commercial location, but a great location nonetheless between Southwark Tube and London Bridge, and it'll do very well.
One interesting byproduct of service offices having taken quantums of space in the South Bank has been the displacement of the original occupiers within those buildings. For example, at Friarsbridge Court, where WeWork had taken 96,000 square foot, there was a series of tenants on single floor basis within that building who were served a firm break date. And through that process, they've had to go out and look for space because they need to relocate. And that has seen a benefit to the conventional landlords within the South Bank, within the immediate area. We've seen these occupiers prepared to pay the right rent for the best quality space.
I am apparently considered the Queen of Vauxhall, as I have been working down in that market for 4 years now. So we started off down there working on some really short development projects. So I was doing leases of anything from 3 to 12 months on a couple of sites down there. Subsequently, those have now emptied out and we're working on the redevelopment, and should be bringing those buildings to the market in the next 12 months, which is going to be really interesting. Luckily, Vauxhall has seen a huge uptake of office space in the last 12 to 24 months. So we've got, as everyone knows, the American Embassy, which is a fantastic offering for the area. We've got Penguin Books and Random House. The Royal Mail, for example, have just increased their amount of office space they're going to be putting in their scheme down there due to the uptake. The demand is so high for the Vauxhall market. So going forward, we're really excited to see the kind of rents that we're going to be achieving for our landlords in the area.
Well, supply is very low. It's about the lowest it's ever been. There is demand there, but of course we have got the political uncertainties at the moment, and that is challenging. That's playing into the hands of the serviced office operators, and we're really seeing a lot of businesses that don't really know where they're going to be over the next 12 months going into serviced offices. But if you've got a very good quality product, there's demand, and that space is letting well. One of the interesting recent transactions is Leon, the restaurant chain, taking just over 8,000 square foot in what's considered quite a back street of South Bank called Copperfield Street. They are paying a rent of £61.50 a square foot in what would have been considered very quite secondary location. Just goes to show if you get the product right, the design right, you can really get some very good rents. Embassy Tea House on Union Street is another interesting example. This is a building there that offering managed office deals whereby the landlord provides all the furniture, all the desks, and a flexible lease term. And the rents that are being achieved there are huge, looking at approaching £200 per square foot on an all-inclusive basis.
The office market at the moment is a little tricky, I think. There is definitely a lower level of confidence out there. The occupational market is affected by Brexit, I believe, and also the economic uncertainty that we face. It's true to say there's definitely a lack of good quality space, so the amount of refurbished and Grade A space is less than 100,000 square feet at the moment, and that is historically low. So occupiers are always looking for quality space, best in class, and they are facing a real shortage of that. And combined with the political, economical problems that we face, that is proving problematic. I think it's true to say we're still getting a relatively good level of viewings, but to try and get that to the next level, to take that into negotiations or any form of commitment from occupiers is more difficult than it was 6 months ago.